You need to be in a position to drill down into the subsectors which are still enjoying buoyant growth rather than get gloomy about a macro GDP figure which undeniably is low growth. This climate is difficult, but the strong get stronger, and we are able to buy great niche businesses that we can really take somewhere, and the economic headwind is affording us opportunities to acquire bolt-on opportunities or bolt-on businesses, which are then allowing us to accelerate the growth profile.
I think multiples are coming way down for a lot of different reasons, including supply and demand of capital. I do take the view that sort of mid and longer term, either call it cost of capital or rates or both are going to go up. Not short term.
One of the big concerns we have is trying to sell Europe to American investors or overseas investors when they're looking at places like Asia and Latin America. But we think we can make good risk-adjusted returns going forward, so generally very positive on the mid-market, particularly within Europe.
We're looking to support fund managers, some of whom are in this room, quite a few of whom are not, who are working on a commercial basis to support, on a buy and build basis, small companies in Europe. The EIF this year will probably commit something like over €1 billion into European Union VC and lower mid-market. There will be a fair number of mid-market funds within the 50-odd fund managers will support this year.
I think the private equity in mid-market is now facing changes that, as any changes, bring opportunities, provided you know how to benefit from them. Mid-market companies prove to be dynamic and resilient. Most of the mid-market companies, at least we know, have gone through a good adjustment of their cost and focusing their business. Now the next challenge for at least European mid-market is finding the role in a world which is becoming global and more complex.
Even at the mid-market, the lower end of the mid-market, people are investing in, great sourcing capabilities and actually doing sourcing based on sector mapping, really expanding their networks, going out and meeting companies and not waiting for the phone to ring. And I think that's very important.
Obviously, the current financial climate makes life very difficult for everybody. But having said that, historically, private equity has done better when they've been investing when markets are troubled and values are down. And I think we've seen it with the reduction both in the volume of business and also a big sharp reduction in the price of those businesses which private equity are buying. So the multiples have come down from 7, 8, 9, 10 times down to 2 or 3 or 4 times, and I think that's a big improvement.
It's really important before you start approaching the LP community to really understand what your differentiating strategy is. Do you have the right team? Do you have the right skill mix? Can you walk into that room and articulate your strategy clearly?
Well, I think there's always a matter of transparency. I think that they've got to recognise that the LPs want a lot of information, a lot of data. I think that they are responding to that, and there's certainly a lot more data rooms available to LPs, but they shouldn't be resentful of the LPs asking for information, because after all, they are the buyer of the product. So, the seller should jump as high as he possibly can to convince the investor that that he is the right place to park money.
Overall, I would say that general partners still need to return money to LPs. They still need to show that they can do good deals and return cash. Provided they can continue to do that, I think the outlook for the relationship between GPs and LPs is very healthy.
The last 5 years has seen a real mindset switch where people are investing in their investor relations function, investing time to have regular updates with their LP community, are investing time to provide whatever data and whatever transparency that we need at the underlying level. And transparency is a very important one, because we have investors who knock on our door and say, what's going on with my portfolio? And we need to be able to answer those questions.
Emerging on the side of the LP. It's slow, it's glacial, but things are moving in the direction of better terms in terms of pricing now we're talking about, but other things too, transparency, all the qualitative stuff too. And that relationship is improving vis-a-vis the LP. So the LP is gaining.
By and large, most limited partners recognize that private equity across the board has historically done certainly as well as listed investments, and in a lot of cases significantly better. So I think on balance they probably should be, LPs should be relatively happy. Whether they are or not, you never know. They always want more.
You guys are really smart. We come into your offices, you give us 2 hours or 5 hours of bullshit. You know, the presentations are all great, we walk away and we say, wow. But if we co-invest with you, we watch your due diligence, we see the processes, it is like a searchlight. And that is very helpful for us to understand managers.
And for the LP, it's very, very important to feel that the money which has been given to the GP has been well looked after, and we need to know that. And I do emphasise again, it's the bad news as much as the good news that we need to know about as soon as it happens, and not via somebody else, because that really is a killer for any future relationship.
The type of conversations, most of them to date have been discussions about fund extensions. People don't want to put the money to work too quickly, don't want to come back to the market too quickly. So people are coming back and asking about extending the terms of the funds, the investment periods by 12, 18 months. And that usually comes at a cost, so it's usually a reduction in fee, or it goes to the post-investment period tail off as it would normally, just been brought forward a bit. So there's always something.
In my business, these sorts of events are incredibly helpful because they provide an environment, a friendly environment in which GPs and LPs can get together in, let's face it, fabulous surroundings, beautiful city, and just share ideas about what's going on in the current market, where the opportunities are and indeed where the challenges are.
I think that's what I've seen from the events is quite interesting, especially I'm really impressed by the audience. I've seen many of my customer and relationship, not only from the UK, but let's say from many European countries, from Western Europe, but also Eastern Europe. So let's say for me, it's a very interesting place to be.
I like events which are very focused. And of course, this AltAssets Mid-Market event is a focused event. So for us, we meet really people who are interested in this asset class.